So what's the best structure to use for your real estate investing business? Let's say you are flipping houses. You're buying houses, renovating them, selling them, or you're building spec houses, doing those types of things. So number one, you want to talk to your accountant and your attorney to get the proper advice, the best legal advice and tax advice for your situation. Everybody's situation is different. Every state is different. So you want to make sure you get their advice and make sure you're structured correctly and all your paperwork is done correctly. You also want to make sure that you're taking all of the tax advice into consideration as well. So generally what you're going to want to do, and especially if you have investors, it's much better to go ahead and have an operating entity that you do that manages all the projects, that is your entity that receives the income from income coming off of your projects that you're working on. And then each individual project you're going to want to set up into a separate LLC. In some states you can use a series LLC, but you want to place each property in a separate LLC. Some people will use land trust to put properties in. And the reason for that is asset protection. So you do not want one property affecting all the properties or affecting your main business. If something goes wrong, if there's a lawsuit, somebody gets hurt or something happens to the property, you don't want that affecting the other property. So my advice is to always place each individual property into a separate LLC or a separate land trust, whichever is easier for you to deal with in your state. And keep them separate from your operating entity that actually manages the project and contracts with the contractors, things like that, so that you don't have all those separate issues. Secondly, you want to make sure that when you are dealing with contractors, you have good, clear contracts with a clearly defined scope of work, all your selections spec'd out and detailed, and you want to make sure you get lien waivers before you release payments to the contractor so that there are no disagreements or miscommunications or anything like that, misunderstandings at the end of the day. Nobody's filing liens or not paying their workers and the workers come back on you. Because if a contractor hires a worker and they don't pay them, but you've paid the contractor and there's no lien waiver, that subcontractor can come back and still file a lien on the property even though you paid the general contractor, or if you paid the subcontractor and they didn't pay their employees or vendors, they can still put liens on the property. So if you get lien waivers from all of the contractors on the job, if you're subbing it out yourself, or the general contractor, if you've hired a GC, then they are responsible for all payments and they cannot file a lien, or it makes it very difficult to perfect a lien. Of course, lien laws are different in every state as well. So you can mitigate a lot of these issues by making sure that you have the proper documentation, proper contracts, lots of detailed scope of work, specifications, things like that. Make sure you get lien waivers, and make sure that everybody is on the same page. Keep all your properties in a separate entity, and keep your operating company a separate entity from all of your individual properties. So that is a quick overview of how you want to structure yourself from a legal standpoint and a tax standpoint when flipping houses.